Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily review for Wednesday, the 8th of December 2021. Time is 20 past 4 in the morning, GMT. Asian session coming to close, European session firing up, our lunchtime, North American session. Right, Tuesday the 7th then, the 12th, the last trading day, we had a positive opposed driver in the dollar, plus 50. Front and back door flows, mainly coming out the pound at minus 33, out the euro at minus 27, and the yen was the positive rock at plus 10, activity plus or minus 60. Intra-week then, this is from Monday the 6th, open to about 15 minutes ago. We've got a negative unopposed driver in the yen at minus 254. Front and back door flows, mainly going into the pound at plus 283. The dollar was the positive rock, into the dollar at plus 39, and the euro was the positive rock at plus 12, activity plus or minus 254. So yesterday we had a bit of dollar strength driving, and we had flows out of the pound and the euro on light activity. Excuse me. But over the week we've had a serious drop off in the yen. After this previous pump up in the yen last week, off the back of the equity transmission really, because equities have been flying. So anyway, this is intraday now, today Wednesday the 8th, open to about 15 minutes ago. We've got a negative opposed driver in the dollar at minus 56, front and back door flows mainly going into the euro at plus 43, into the pound at plus 15, and the yen is the negative rock at minus 2, activity plus or minus 58. Right, we'll stop that there, right up the flows then. Right, we've written up the flows. So the euro is strong except against the AUD, the yen is weak except against the NZD, the CAD and the dollar. The pound is strong except against the euro, the Swiss and the AUD. The Swiss is strong except against the AUD and the euro. The CAD is weak except against the dollar. The AUD is strong across the board, and the NZD is weak except against the dollar and the CAD, and the dollar is weak across the board. So what have we got? We've got dollar weakness across the board. We've got AUD strength across the board. We've got secondary euro strength there, and we've got secondary CAD weakness there. So that's what we've got there. What's going to knock it about today? Well, we've got the CAD's rates decision today, and the CAD is soft in the Asian session at the moment, so that's interesting. And we've got Reserve Bank of Australia's Governor Lowe's speech, and the AUD's pumped off the back of a strong equity transmission, and the fact that the yen was seriously positioned long against a falling stock market, but now it's reversed. So there we are. We'll stop that there and write up the asset classes and then do the analysis. Right, we've written up the asset classes then. So the dollar index has come back 0.20, so it's 20% off the modelled high. Gold is 0.45 from the high, so it's above half marks. Oil's 0.40 from the floor, 40% above the model floor, so it's relatively weak but come back. Wall Street, S&P Tech, we've had this recovery in equities. Wall Street is 0.17 from the high, 17%. S&P is better, 0.05, 5% from the high, and the tech is 0.19 from the high, 19%. So Wall Street, S&P and tech are about just shy of 20% off the highs, whereas S&P has nearly recovered to the previous high, it's 5%. Right, US 10-year in the bund, this is the price. The US 10-year 0.38 from the floor, so it's below half marks. Yields are relatively strong, and the bund did this break in price, which means yields were weak. It's now back to that resistance, and it broke about 12%, so it's that's where we are. So the bund, the European yields are still relatively weaker than the US 10-year. Copper's chopping about 0.33 from the high. It's improved, it's a third off the model high. And US steel is 0.40 from the floor, which is basically, so it's soft but nearly at half marks. Right, so let's just get rid of that then, and really, what are we talking about? Well, we've got CAD rate decision coming out today, and we'll just get rid of this and we'll draw up the majors. So dollar, euro, yen, pound, CAD, AUD, NZD, Swiss. Well, the CAD, you've got this rates decision today. Equities on the yen transmission came off and they've now pumped back up, and the yen has reversed out. So the yen's been pretty weak via the equity transmission. Just grab this. As I say, we've got relatively light data, but we do have the CAD rates decision, and the dollar index is about 0.20 from the modelled high, so the dollar's come back about 20%, and the Asian flows are suggesting dollar and yen on the negative and pound and euro on the positive, which is sort of a mixed risk-on sort of scenario there. Now, we were dabbling in the AUD yen trade yesterday, and with mixed results, but that was where the action was. If you were long AUD yen, you were doing well yesterday. So that's which was off the back really of a number of transmissions off the equity transmission with the yen, and the AUD was getting a bounce from basically the rates decision issue and a few other things. So that's where we were. So where we're going to go, what's going to derail this? Well, not much at the moment. I think we're going to hit these previous highs maybe, but then don't forget we've got this volatility echo in the pipeline, and we're likely to see some sort of pullback in equities at some stage. So it's not all going to be plain sailing. So you're likely to see this, as I said, this volatility echo, and so we had that down. We've now dirged back up, and now we're into this phase here where we might see a downward thump in volatility, rising volatility, and a drop in equities. Because it's all been a little bit too easy. Buying the dip was just too easy, and the markets don't usually work that way. So just bear that in mind. So we'll be watching out for that, and there's plenty of time left for this so-called Santa rally as well. So we could well see a nasty drop off again, just to wake everybody up who's gone in and long on equities and risk. So anyway, thanks for watching. See you tomorrow for the daily briefing, and goodbye.